Carlos says, help me out here. I feel like the stock market is due for a correction, or right now a bigger correction. So I'd like to move some money out of stocks, but bonds are pitiful right now. Cash is bad because of inflation. Yeah. I've never been a big believer in gold. Good idea. Where am I supposed to put money right now? At least he didn't say crypto.
Under the mattress, Carlos. No. Kidding.
Bury in the backyard in a jar.
There you go. So I would say, first off, to that, people have been saying the stock market's been correct for years, and eventually they will be right, because eventually it will happen. I mean, I kind of don't really count the whole little blip in 2020 from the coronavirus. I don't really call that a correction because it was so short-lived. Most of the time throughout history, when the market goes down as much as it went down during the coronavirus, it takes a long time to come back. It doesn't come back within, just a few months like it did in 2020. And so I feel like, at least by my definition, I feel like we haven't had that big correction that people are talking about. And honestly, we need to start, first off, I want to define some stuff first. A correction has a specific definition. I'm going to say pullback, correction, and bear market. Those are going to be the three definitions here. And a pullback is basically just a pullback of 5% to 9% of the recently hit high in whatever indice we're talking about, S&P, Dow Jones, NASDAQ, whatever, right? So that's 5 to 9, that's a pullback. A correction is 10% to 19%. All right, so that's a correction. And a pullback of 10% actually happens almost every single year, if not like multiple times in 1 year. Yeah. Like 1 to 2 times per year, you'll have a drop of 10% from the old high, and then it might end up coming back. And that's just normal, right? And so I think what people are really concerned about is that bear market, the 20% plus loss from a recent high. That's what people are really concerned about. And like I said, people have been talking about that for years, that we're going to have one, because we were in the longest bull market in history, right? So we're due. We are due. So yes, there will be a correction eventually. Is it happening right now? I mean, I don't have the crystal ball, right? Nobody really does. But I would say this: time in the market, not timing the market. And right now, if your stocks are down, pulling them out and trying to putting them somewhere else might actually be a bad idea, right? Because what you just did is you bought high and you're selling low. That's the opposite of how you make money in the stock market. And so I'd say, first off, and you didn't say whether or not you're working with a financial advisor right now. So I'd say, if you are not working with a financial advisor and you would like to, we'd love to be able to find a little bit more about your situation to like fully be able to advise you here. But stocks historically have been great places to put money, depending on how far out you are from retirement, how old you are. It doesn't say that here. That could still be a great place, because if you've still got a long time horizon, and the market goes down, it doesn't really matter, because you're pumping money in. I mean, if you're contributing regularly to a 401k, which again, it doesn't say that right here. But if you're pumping money in right now, you're going to have more money in at these lower prices, these lower share values, and then that's going to go back up. You're going to have more money going back up. And so depending on where you're at in your financial life right here, could determine what that answer is. But in bonds, I'm going to talk about this for a second here, because bonds, we're in a unique environment with bonds right now. It used to be, when people put bonds inside of a portfolio, the reason they were doing that was because, one, they wanted some stability, and two, they wanted income from the interest that it was generating. And the problem is, those two reasons to have bonds in your portfolio aren't really being fulfilled by bonds today. One, because interest rates are so low that the interest that you can get on some of these bonds isn't really a meaningful income stream anymore. And two, they're not as stable as they used to be. I mean, they were down last year. They're still down this year so far. And so the problem with that is, even looking forward, so that's what happened in the past, even looking forward, bonds have an inverse relationship with interest rates, meaning if interest rates rise, which we've already been told that the Fed plans on doing that a few times this year, but as interest rates rise, well, if you're currently holding a bond or a bond fund, right, which that's how most people hold bonds, is within bond funds. So now your bonds are worth less. No, they're not worthless. They're worth less. They're worth less, because if interest rates go up, who wants to buy your bonds that are paying less percentage than ones they can go out and buy now? right? If your bonds are paying 2% interest and they can now buy some that are paying 3%, who wants your bond buying 2%? So the value of your bond just went down. Your bond lost money. And so that's what we see ourselves. That's the environment that we see ourselves in going forward with bonds. So you are right. Bonds are pitiful at this point, in my opinion, too. And if you want some safe places, I mean, we have other alternatives out there. I've done I think a couple podcast episodes ago where we're talking about some safe liquid growth inside of a very specifically designed life insurance product. And so once again, this all depends on where you're at in your retirement or your financial life, what your goals are, what your risk tolerance really is. And so if you're already feeling a little, you got that feeling in the pit of the stomach from what's going on right now, it's like maybe you're not aligned correctly from a risk standpoint, and maybe some things do need to be changed, but it's got to be part of an overall plan. It can't just be, pieces here and pieces there. So I would say if you want to reach out and we can actually find out whether or not you are in a good spot, or if there is some changes that need to be made, but it's going to be based off of an entire process. As always, guys, if you want more confidence in your retirement, our contact information, our calendar link is going to be in the description. So don't forget to smash the subscribe button, hit that notification bell so that you can be notified every single week when we get new content going on. We also have another YouTube channel for our podcast called Retirement Rescue Radio, where we also dive into a lot of topics very deeply. We do that long format, sometimes half an hour to an hour is what some of these can be. And so once again, guys, appreciate you sticking around here. Join us next week, same time, for some more content to give you the information that you need to empower you to live the retirement that you deserve. Take care.